Ladies and gentlemen, Gay Kim here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is up about 0.12% there on the S&P. Looks like NASDAQ and semiconductors down today along with the biotech. We did have a Dow, small caps, slightly green today. Transports, had a good move today, 1.3%. Same with the banks and energy. These three guys been doing well this week, it looks like. Obviously, biotech's down about 2%. Healthcare's pretty much flat there. Home builders continues to make a move to the upside. Utilities pretty much flat. Retail did lead the market today with a 2.3% positive. Emerging market is pretty much flat. Bitcoin's down about 2%. Bitcoin's been making a move. Good move this week. Gold, silver miner, they continue to struggle quite a bit here last couple weeks. Dollar's flat, oil's up 2.3%, treasury bonds down, VIX is up a little bit. Let's stick with S&P. Spider 65-minute chart here. So yesterday I was not able to do a video or tweet anything out because I did have a technical difficulties with my charting software that you see on your screen. I thought I could fix it. I was kind of pretty much working on it all day long, something to do with the upgrade and the system and all that. So by the time I got done with it, it was a late night, and so I was tired. I just went back to sleep. But it's working good now, so I was able to come back to you guys today. But looking at Spider here, it looks like, it's what a mess here. Look at this ugly, candles here with all these wicks. Isn't that crazy? That's pretty much this entire week. Well, this entire week being last couple days. It looks like that's a Friday's move there. This is Monday. This is today. And look at these choppiness that we're seeing pretty much last 3 days. It is ugly. It is, it's not pretty in my eyes to glaze at. Nothing sexy or glamour about it. It's just nothing but like moving, doing nothing, right? And obviously, there were sectors that made a move, like energy, the banks. I mean, I looked at my bank stocks that I own. They were up quite a bit. Transports were up today. Home builders, obviously retail and stuff like that. But just focusing on the S&P alone, that's kind of what I mean by it. The market has been pretty lethargic. Even you can see like Amazon now. If you look at Amazon, like if you actually bought Amazon and Netflix, if you actually bought Amazon and Netflix like July of last year and you held it until this year today, your return zero, nada. So, but there's some other stocks that moved. A lot of stocks that were lagged last year that made a move. That stocks, a lot of popular stocks that made a move last year didn't do so well this year. A lot of hyper growth stocks got into a crash. Huge correction, 40-50% or so this year. So it's been a very, very mixed market. And this has been the story pretty much this entire year. And if you think when the market is choppy like this, you think you have to like pick and choose and be very, very short term and nimble, actually you have to do the opposite of it. You have to be more long term because the market is up 17% year to date. You have to understand the fact that, as you can see here, S&P is up 18%. NASDAQ is up 17%. Some of these indices, banks are up 30% year to date. Energy is up 40%, like retail's up 50%, home builders up 30% year to date. Though it feels like it's gone nowhere this entire year, market is up close to 20% on S&P. So if you've been trying to be in and out, getting stopped out here, getting stopped out there, getting burned through hedges, getting, YOLO, some shorts and longs or whatever, FOMO, weeklies, all of that, you've just burned through all of those. Because the market has been very lethargic and market just kind of been like, we've seen certain sectors go up, certain sectors go down. And so it's been very, very difficult market for short-term traders because short-term traders make money off of kind of that big swings, continual, swings that, that rally that could continue. But when the market is lethargic like this, because S&P did make a move, year to date 20%, so market is up, and it's consider a good year when the market is up 20% year to date. And so, long-term investors took advantage of that, holding through some of these up and down shenanigans. But anyway, so looks like here that's the kind of a micro-term pivot. Look at these ugly wicks here. I don't think we've seen anything like this this year, but it seems like that's kind of what's been holding their entire day. And you can see last 3 hours of today's trading, it kind of fizzled lower. And I've been tweeting things out that, Oscillator initially crossed up here, but we needed to see advancement towards close. Well, we didn't see that. We actually saw downturn. So actually, Oscillator doesn't look too great. And I'll get to a little bit here, but I wanted to kind of zoom out a little bit, kind of get an overall picture. So you can see both of my short-term moving averages rising. So we want to continue to give benefit of the doubt to the buyers. You can see we're still in the vicinity of a higher highs. And we got some of the cultivations, how low. Should there be any kind of shenanigan going into tomorrow? I would say, 441. We can see that my short term is residing at 440. 441 or so would be the level of support. Let's say market really goes down, like 1% gap down, and a bloody red day tomorrow. We got the gap area. It's going to provide support, not to mention my secondary short-term moving average residing in that vicinity. Remember, I always say when gap gets open to the upside, bulls deploy these gaps. Should there be any kind of shenanigan so that could act as cushion, a little bit of consolidation. We talked about this last couple of weeks, that I look at this as not a topping pattern, this right here, but a consolidation could potentially be a continuation pattern, right? We go up, sideways, we go up, especially the secondary short-term moving average acted as support, not to mention coinciding with the gap area. This gap has never been filled. Though there was a 2 attempt to fill it, bears really needed to fill this gap, they didn't. So here, there's another gap, right? So we can see even just looking at these gaps, though this market is choppy, though this market is a lethargic, we want to continue to give benefit of the doubt to the buyers. Let's check out the oscillator and see if we can extract any more information. You can see this is what I mean. There's right there. That's that whipsaw, right? At one point, this thing was like crossed up like this, and that happened right here on this candle. And I tweeted out that, we need to see a continuation, move to the upside towards close, or at least hold some of these gains. Otherwise, it's not going to be a real legit cross. And you can see with that little downturn we saw last 3 hours, this thing whipsawed back down, because this is a momentum indicator. So there was no momentum. Though we held it, we sideways, but there was no momentum. So you can see we whipsawed it. So we're still kind of in that falling pivot here, potentially prior resistance, new support type of deal, but we really need to see some traction to the upside for this to kind of, get right back up. We've seen some of these whipsawing action before, though. Do you see right here? I remember, I was analyzing this last week. This is what it looked like right here, similar to here. You can see, and then like next day or two, we saw a move. I think it was next day, and then Oscillator got up, and that was when we saw that bullish move right here and we saw the gap up next day, right? And then we saw that move right there, and with that, this was right here. So this was right here. So we saw a gap up, we saw a little whipsaw, and then market saw a move to the upside, and then that's when we saw that cross, right there, and then a little pullback right there, that little dip, and then made a move. So that might be still, in the cards, where as long as the oscillator can stay above it. For oscillator to stay above this because this falling pivot here, there has to be either continue to be sideways, but at some point it needs to make a move to the upside for it to kind of gap back up. If we do see a slide, however, quickly this is going to come back down, and there might be a retest of this gap very, very fast, right? So this is kind of the level we want to look at, which is a 441, 442 currently here. But if we do see first hour sort of a bearish candle, I could see this thing kind of coming down here. But it needs 2 hours, I think, to truly see that transitioning downside, breaking below this pivot area, or at least retesting that short-term moving average. Because, you could see like something like this in the first hour, and then like towards the end of the first hour, we see a long upper lower wick, see a little, hammer, and then this thing reverses on you. That kind of stuff happens a lot in a bull market when the market is an uptrend, so keep that in mind. You could briefly retest that. If we do see something like that, this would look like this during the downturn, and then it will just go right back up like that. So the reason I mentioned that potential scenario is just because the market has been like that for a while. It's just been you know what I mean? So, and especially knowing that this last couple of days, it's been pretty lethargic with this. And so let's continue, you want to continue to kind of stick with the long term. I would kind of ignore the short-term fluctuations. At minimum, understand the more about midterm sentiment of things, because in the short term, it's just, you know what I mean? Market is going up. Market is up 20% year to date. It just feel like as though it hasn't gone anywhere just because this market has been moving so slowly. And truly to profit from this market is to be long-term, to hold things, to ride things. You're trying to time things, trying to prepare for corrections. So many people thought that we're going to see a steep correction this year. We have not seen one this entire year. The most we've seen was 4% on S&P. Though, however, we did see 10, 12% and 8% on the NASDAQ. So NASDAQ, we've seen that. Some of the other sectors, we've seen that. On the S&P, we have not seen a real correction. So let's see how the market plays out. Come back for you tomorrow. We'll go from there. Enjoy your evening and good luck trading tomorrow.